Hi, welcome back to the show. This is Joe Rabil with Rabil Stock Research. And today in the lesson to start the show, I'm going to talk about ADX. And I think there's been some confusion. I definitely get some questions on this from my subscribers. And, you know, what I notice periodically is I have subscribers and or people just watching the show who ask questions related to ADX where they say that they want to use a shorter ADX setting because they don't want to have so much lag to the indicator. And I tell them not to do that. In my opinion, I don't think that's a good idea. In fact, I'm using a 13.8 where the 8 is the ADX or the smoothing, and that's actually moving pretty quick. But what I want to explain is why ADX is both a leading indicator and a lagging indicator. So let's go ahead and get into the agenda. So yeah, the question is it a leading indicator or is it lagging? And the fact of the matter is it's both, okay? And if you understand what it's telling you, the lagging portion of it is not a detriment, okay? We can use price to really help us to alleviate the weakness in ADX if you understand the power of ADX. So that's what we're going to delve into today. I do want to explain that couple times where I think ADX has a huge amount to say, and then there are other times when I'm probably going to lean on other indicators. And then we're going to go through the individual stock requests that came through. So let's go ahead and get into this lesson now. So I've got a monthly chart of ABC on the left and a weekly chart on the right. And what I want to show here is if we look at what price went through the start of this correction in 2015 and then went sideways for a pretty long period of time until really breaking out in late 2020, early 2021. Notice how the ADX was low during this period. And if we waited for the ADX to get strong and above 25, the price would have been way up here. It would have already have made a pretty significant move. And I think this is where people get a little bothered by ADX saying it's really not that helpful because I'm missing a good portion of the move before the ADX actually kicks into gear. What I like to do is if we have a low ADX condition for a period of time and I can draw a trend line on price, and so I would draw the trend lines in and have this way. If I have that, then I know the moment this breaks the trend line, it could be considered, even though the ADX is not turning up yet or confirming the trend. If we have a pattern on price and we have low ADX, you just want to draw the trend lines on the price action and then look for a breakout. Okay, so even though this is lagging here before it really kicks in, it told us a lot during the course of, we actually had years where we knew that something was developing here. And then once it starts to kick in based on a price trigger, then we have something interesting. Now, if you notice, as this started getting into 2020, look at 2020 here. And notice what happened. The ADX got really low on the weekly chart as well. And so we had the combination of, and again, we'd have the same trend lines in here. We have the same kind of confirmation based on the price action breaking above. But when you have low ADX in 2 consecutive time frames like this, you can expect something explosive to develop. Now, it actually took a little bit of time to really get going. If you notice, it kind of checked back, made a higher low, and then checked back again, made another higher low, and then finally broke out and has now started to accelerate. But the point I'm trying to make here is that even though this was low in both cases, and lagging when price was breaking out, to me, it told me a lot because I'm zeroing in on this stock and I'm saying, okay, if the price breaks out, I know what the ADX is telling me is important and that something big is in development, okay? Now, the other way that I would suggest looking at this is if you look at this move, well, first of all, look at the ADX during this portion. So we know we're in a strong long-term trend. And then we make a new high here in ADX, which confirms this move right here. And then price goes sideways while the ADX is going down. Now, you could argue that this breaks out at 130 and this is way down here, and that's like a divergence. But I wouldn't consider that. I would actually look at both the MACD making a lower low and the ADX making a lower low while price is making a higher bottom as a reverse divergence. And the breakout at 130 is just the confirmation that these are getting ready to get going again. So if we understand that this peak here is confirming this peak here, then I know I've got a positive bias in this. Unless red shows up and starts to really take over, you have to have an upward bias. And so even through this consolidation pattern, and yeah, you could say, oh, I have little mini divergence here. Well, yeah, but that's just a minor thing. If you don't get sellers to show up, then your bias is to the upside. And that's based on the signal that came way back here. So if I know that this is a leading indicator in a way, because if I make a peak here and on price and this confirms that, I know after a consolidation, there's a very high probability we're going up again. So that to me is a leading indicator from that standpoint. Now it might lag at the actual price breakout, but what happened prior to that is giving us a significant amount of information. So I just wanted to make sure I covered that. Because I think your understanding of this can help when you have a stock in a strong trend looking at a pullback, or a stock that's been doing nothing for years and is getting ready to break out. We want to use price in both instances as our trigger, but having the ADX and even the MACD as a leading indicator prior to that gives us a significant amount of information about which stocks to focus in on, which stocks have the potential for real powerful moves. Let's go ahead and get into the stocks now. Just briefly, my services can be found at rabilstockresearch.com. If you have an interest in trying the service, you can use the coupon code StockTalk and get the first 2 months for $50. The individual package has 2 to 3 reports each week, as well as a special video for that package. Let's go ahead and get into the stocks. Okay, so as we get into the stocks, I've got my 4 charts back up here, and I'm going to start with the S&P. And I figured I'd give an update on this just based on what's taking place in the market right now. And then I am going to talk about Disney. I like to pick out something that was newsworthy. They just came out with earnings, and just talk about that a little bit. I was going to go through the QQQ, but I decided to take some of the biggest stocks in the NASDAQ 100 and go through them. There weren't as many requests this week. I had some emails from guys saying they're having a harder time finding stocks, which makes sense. But I do think it's important to recognize what's going on from the top. These are the biggest stocks in the market and what they're doing right now. So let's go ahead and start with the S&P. And the one thing that I would tell you, I think we need to be cautious about here is getting too negative, because at least in the short term, because we've gotten stretched away from the 18-day, we're getting stretched away from the 18-week, and we do still have a rising 18-month line right now. With that said, what I would be looking for is a reversal in the trend, and if you notice, we have a declining 18-day. In a declining 18-week. So any kind of rally that we're going to get right now is probably going to be met with resistance, at least at the beginning. But what I'd be looking for now that this is getting stretched away from the weekly line especially is some form of a climax. Maybe we're going to come down to this bigger support area, 3,600, 30, somewhere in that region, and get some form of volume explosion, because we really don't have that yet in terms of the way this is developed. We're not getting the type of volume action that would suggest that people are really giving up on it. So we're looking for that kind of a climax pattern. But I think one thing that you want to recognize is the difference between trading and finding trends. The trends are breaking here. I mean, the trend is breaking here, and we now have a lower high and a lower low in place, which basically has the same slope to the declining trend line as the 18-week does. And we talked about that before. So momentum is pretty strong to the downside, but we're getting stretched away. We should be on the lookout for some kind of a climax that would cause a decent sized rally. That's what I would be looking for on the S&P. As we go through some of the bigger stocks, I think it'll start to make sense as we go through and look at their momentum conditions as well as the price action. Let's go ahead and look at Disney now. So Disney, and if you go back to what our discussion that I had a few weeks back about price support and resistance, if you notice, we came down to the top end of this big support level here, which did not hold. And that doesn't surprise me because we had a pretty strong trend in place with good momentum. And when the trend is down, we don't look for the top end, we go for the bottom end. So we're coming down to this lower end of support. We're getting pretty close. Now, that doesn't mean that you want to go diving in and buying the moment this hits this 100 level. But I think you should be more on the lookout for some type of a rally back, because look at how far away we've gotten from the 18-week. We're getting far away from the 18-day. Now, the momentum conditions are strong. You see how strong the ADX is here and the strong the ADX is here. Any kind of rally is going to be probably short-lived. But I think just based on the fact that we're coming down to this support area and we're getting stretched away, we're oversold right now, we should be on the lookout for some kind of a bounce back. That's what I'd be looking for. Just understand the difference between counter trend trading. On my YouTube channel, I just did a video on counter trend trading, and this is not quite the situation for that, but and I give some rules as to what I'm looking for. So that might be worthwhile to go to that. It's called Invest Like a Pro. So if you're looking at this right now, again, we've got a little bit of room for a rally, but because of the momentum, because of the relative strength, you got to be really careful here. Okay, so now we want to go into some of these big stocks and what is taking place. And the one thing I want to focus in on is this weekly chart. And, I think if you look at it in these terms and try and keep it simple, we've broken the trend line. Okay, and then we went back and tested, and now we've gone to a new low. We went below this prior low. That is the 1, 2, 3 sequence that I talk about in my book. And it's not like I invented that, but I'm telling you that this is a pretty strong sign, not necessarily confirming evidence, but a pretty high probability event that is telling us that the trend is broken and that we've now reversed to the downside. Now, what I'd recommend here is not necessarily look for some kind of a massive drop in this. I think what you want to learn from the fact that we've made a 1, 2, 3 top is that what the trend that this has been in for the last several years is over. Okay, now it's a question of, is it going to turn into a downtrend? Is it going to go sideways? How it reacts at these support levels, I think, is pretty important. The one thing that I would tell you right now, at least, is we don't have that much strong evidence on the momentum side. Okay, the trend is down, but we haven't taken it to a level that suggests a lot of acceleration to the downside at this point. I don't like 150 has been pretty important to me because you're making a lower high and a lower low, and obviously after breaking the trend line, I think that becomes pretty important. But we are getting to the MACD 0 line on the weekly chart. Again, we're stretched away from the daily. Look at how far away we are from the daily 18. Should this bounce? I think there should be some kind of a bounce coming. So just be on the lookout for that. The one thing I didn't mention about the S&P is we do have a sentiment number that is getting very, very bearish. People are getting really, really bearish right now. And I don't use that as a timing tool. It's a secondary indicator for me. It's a background indicator for me. But I know that if people are really getting bearish, I want to be on the lookout for signs of oversold and signs of reversal. Now, we're going to see a reversal on the short-term time frame, like the hourly, way before we're going to see it on a weekly or a daily. So that's kind of what I would be on the lookout for on stuff like this. But The fact that this just completed a 1, 2, 3 to the downside tells me there's just not a lot we need to do. We now have a trend line going down because we made a lower low. We can draw this trend line downward. There's really nothing to do with this below the trend line. And if you want to be a little bit more aggressive, you can use the daily trend line. But there's just nothing to do below these lines unless you're a trader and you want to trade reversion to the mean back to resistance. So Microsoft, same concept. If you draw in your trend lines, you do your 1, 2, 3, you have a 1, 2, 3 top in place in this one as well. Now, what I would be saying is, look, the trend is down for now. How long does that trend last? I really don't know. I mean, as long as we stay below this trend line, I would argue that this is going to have a very difficult time. I'd be looking for a 1, 2, 3 reversal coming back to the upside before I feel really confident that we have something meaningful going on. Again, if you want to do it in a more aggressive fashion, you could look at it from a daily chart. Now, one of the things I want to mention here is related to momentum. So if we look at the daily chart, we don't have much momentum here. Notice how we're going to a new low and the ADX isn't above 25. So on a daily chart, this decline is actually not all that strong. And that could lead to a minor rally. But if we look at it on a weekly chart, this big leg, so if you'd be looking at this full leg to the downside, which is this leg here, is actually pretty strong because red DI is making a pretty good move. And if you notice, the ADX is actually going up based on that red DI move. So when I see that, I'm thinking, yeah, we've got some pretty strong resistance up at 300. Could we rally in the short term? Yeah. I mean, there's no doubt you could get a rally in the short term, but the fact is that this is pretty strong. This is a pretty strong selling leg. And I think as we start to work back up into this resistance zone, it's going to get much tougher for this one for now. But there's not a whole lot to do, again, below the trend lines. We can go to Google now and do the exact same thing, trend line break, test of the high, and we make a new low. So we have a downtrend in place on this one as well. We want to draw in our trend line here. Again, a more aggressive trend line on the daily. And the way I would look at this is that if you get a move that gets this above and then you test and you turn things around on a daily chart and you have room up to the weekly line, then okay, then maybe you want to try and trade that for a short-term move. But what I would tell you here is that the momentum is actually telling us something a little bit different. This is very strong momentum on the daily chart, which leads me to believe that the 18 is probably going to be pretty strong. This resistance here is pretty strong. But on a weekly basis, I would say that we don't have that much strength. We've made a pretty big down leg and ADX hasn't gotten above 25 on this. So, I think you want to use that in those terms. Like look at it from each time frame and say, how strong is the momentum here? This would lead me to believe if we can actually turn the shorter term trend around that we could get a better rally because this is not that strong of a decline. So it might end up turning into a neutral trend rather than really rolling over. So use the ADX that way. And the one thing I did want to point out, and I know I mentioned that there are times when I don't really want to lean on ADX, and that's when we have increased volatility. So if we get a move in a lot of these stocks, it creates big bars, big, huge bars to the downside. ADX is going to lag because by the time we turn back around, when we get a big bar to the downside, red's going to go up and green's going to go down. And by the time we turn around, it's going to take a long time for the ADX to turn down. So the only way you're going to see that is to go down to a really small time frame like the hourly or something like that. So you have to recognize sometimes that the ADX might be looking really, really bearish. But if we get a climatic move or increased volatility, recognize when it's going to lag and that you probably need to use other indicators that are going to help you at that point. I like to look at price. I like to look at the fib levels and stuff like that once the volatility really explodes. Amazon. So now we're getting into a little bit more pronounced decline. We had the 1, 2, 3 reversal at the top. We had a failure at the 18-month, and then we get a plunge to the downside. Now we are coming down to a pretty big support area at 2,000. And while the momentum is not good here, right? We've got pretty strong momentum on the daily chart. The weekly just got to 20, just barely got through 25 after a big decline like this. So I would be on the lookout for signs of support. Even though it's the top end and we are in a downtrend, I would probably be looking, because of how stretched we are from the 18-month, how stretched we are from the 18-week, and how stretched we are from the 18-day, some kind of a retracement rally. Doesn't mean trend reversal, but some kind of a retracement rally I think will make sense here. Tesla is a little different. We're actually right at the low of the 1, 2, 3. If you take the trend line break and then the test of the high, and now we're testing that low, we haven't convincingly broke that bottom, and we don't have any momentum conditions in place yet. Now, that doesn't mean that this can't break and follow through to the downside and have a lot of risk. I'm just telling you that right now we don't have as much confirmation as we do in these other big names yet. But the recent action is not great. ADX is starting to cross above 25. Red DI certainly moving. Not really the case on the weekly chart, but on the daily chart, we're starting to see a little bit more strength to the downside. Now, this is getting stretched away on the daily chart, but I wouldn't consider it to be stretched on the weekly. So there is some risk in this. So, I mean, essentially, if you've got a stock, and all of these stocks meet this criteria, where we've made a 1, 2, 3 to the downside, except for this one, we're getting really close though, don't be in a huge rush to be a buyer. I mean, let this settle down. See if this can find support. Look for signs of new buying to step up. Look for a change in trend on a 1, 2, 3 going back to the downside. At a minimum, look for a trend line break. Nvidia has completed the 1, 2, 3 to the downside and accelerated. And yeah, we're coming into some price support and we are oversold. So we could possibly get some kind of a bounce. Strong ADX on the daily chart. We really don't have that much on the weekly. So yeah, it could be, if we get a rally, it could be pretty decent. But we just completed a downside 1, 2, 3. Don't think that you want to be diving into this for a long-term trade. It's a short-term trade. If you want to play it for a short-term trade, that's fine. But as long as we're below the weekly trend line here, the trend is down, and I think you need to look at it that way. The Ethereum versus the dollar. So, look at what this did. And this is a request. So we broke the trend line. We came back and tested the midpoint, about the midpoint of the decline. And now we made a new low. The trend is down. We're below an 18-day. We're below an 18-week. And the 18-month is still rising, but we are below that. So look at how strong the momentum is on the daily chart right now. I mean, we're coming into some price support here, but this is not a stock, this is not a market or an instrument that you want to be playing with unless you really want to play on a shorter time frame. Obviously, based on what I've been saying here, we've broken this trend line. We've reversed this trend to the downside. Now we have a downside trend in place. This lower low in all of these stocks is really important because now we have a trend to the downside. And until we can reverse that or at least break this trend line, you need to be really careful unless you're short-term trading. Now we're looking at an energy stock that actually has made a really nice move to the upside. It does look like it's getting a little tired after the long run. Look at how long this has been respecting this 18-week. We pulled back and held, pulled back and held. Now we're testing it again. If we break the 18-week, then you're looking for something a little bit longer that allows this stock to come back to the 18-month, right? So it's not early. It's not a stock that I'd probably be focusing in on just based on the fact that we're stretched from the 18-month and that this has been a long trend on the weekly without breaking the 18-week. So a little bit careful here. See how this reacts at this 18-week right now. If it breaks that, then you have some time on your hands. Okay, so DK is trying to turn things around here. Nice move to the upside, improving momentum conditions, but I want you to recognize that we just tried to break above this resistance here, and it looks like we're failing. And we do have an improving overall situation, but it is on the early side. And the fact that we failed to hold the breakout means we probably fill in a little bit more and consolidate. As long as we don't see red DI on the daily chart kicking in, this is something that could be considered. But I wouldn't buy this little pullback because we went up and gave it back in a kind of a harsh way. I just don't think This is something I want to focus in on until we get a little bit more consolidation, a little bit closer to the 18-week, and then maybe the next time around through this line, through this resistance could be pretty interesting. And then let's look at Bank America. Bank America has the trend to the downside. The 18 is below the 40. Both lines are declining. You have a trend line in place to the downside. We did complete a 1, 2, 3 top. This one was a little different. I thought I'd just point this out. So it actually is pretty similar to what we were just talking about. The break of the trend line was really important. You see how we tested it here, tested it here, tested it here, tested it here, and then we broke it. When you have 3 or 4 touches of a line and it breaks, it's really important. And a lot of times when I see that, I don't necessarily wait for the 2 and the 3. This move down, this is 1, this is 2, the test, and then 3 is coming back through this low. So again, we have a trend line in place here. Don't do anything reckless unless you want to be a trader. We are coming into price support, so there's not a lot of downside here. Thanks for watching the show. If you have an interest in having one of your stocks analyzed on the show, go ahead and send the symbols to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.